Our country has been gripped by anger, fear, and sadness over what's happening in Los Angeles. Join me as we try to analyze what happens next to the idea of a common destiny. Listening to America, a special edition on this station.
Tune in to Iowa Public Television tomorrow evening at 9.
Stay tuned for more TV worth watching right here on Iowa Public Television, a resource for Iowa's future.
Acquisition of the Nightly Business Report is made possible by Friends of Iowa Public Television and by Piper Jaffray, with offices in the Quad Cities, Ames, Waterloo, Des Moines, Mason City, Sioux City, Storm Lake, and Oskaloosa, which is pleased to help support the Iowa broadcast of this evening's Nightly Business Report.
On Wall Street today, a new record high. The Dow Jones Industrial Average rose 42 points to close at 3378.13 as the bulls led a solid charge to higher ground. Good evening, I'm Cassie Seifert. After Friday's fears that the violence in Los Angeles might spill over to Wall Street, the only ones running scared today were the bears.
And I'm Linda O'Brien. Estimates of the damage as a result of the Los Angeles riots also went higher today. City officials turned to the business community for help in rebuilding.
The Nightly Business Report is made possible by Digital Equipment Corporation, leveraging investments in information systems for today and tomorrow. People come to us for results. The $57 billion Franklin Group of Funds, helping nearly 2 million investors reach their goals since 1947. Franklin funds are distributed nationwide by investment professionals. A.G. Edwards, member of the New York Stock Exchange, serving the investment needs of individuals and businesses through more than 400 offices nationwide. And is produced in association with Reuters, the world's largest electronic publisher, which provides NPR with news, market data, and communication services worldwide.
The city of Los Angeles reopened for business today. At least much of it did. But many people in the business community say last week's riots will cost dearly, both financially and in terms of investor confidence. Property damage estimates now exceed $700 million. The state of California, which already faces a $9 billion budget shortfall, will now have less tax revenue. There are fears foreigners will be skittish about investing in L.A. Reporter correspondent John Defterios reports.
Under a high-profile military presence, the work to add up total damages began. Insurance companies moved in to assess the riot-hit region.
The worst that I've seen. I've been to storms and earthquakes and so forth, but I've never seen anything like this.
With 5,200 gutted structures, the insurance industry expects claims of $1 billion. On average, the large companies, like Allstate, will take on 10% of the losses. Analysts say a good chunk of the damage will be handled in the reinsurance market. In local trading, brokers were encouraged by the underpinning of insurance company stocks.
The floor of the Pacific Stock Exchange is one place where business hasn't been damaged. Since the riots broke out last week, the exchange has been able to maintain routine trading hours. However, analysts say maintaining the commercial real estate market downtown may not be as simple.
I think the short-term effect of some of the groups that would continue to stay in Los Angeles choosing to go to a suburban market, that's the immediate short-term effect. And that's a concern, I think, for most of the real estate community.
The downtown vacancy rate is 24%, 5 points above the national average. Another concern is Koreatown. With its strong financial and political base, the area is now baking under the political spotlight. Governor Bill Clinton swept through the town today, and President Bush is due on Thursday. The White House said total federal aid to the hardest hit areas could reach $600 million.
We've not seen a lot of real action on that up to this point in time. It's been a lot of rhetoric. There's been some developments, but it's been like, pulling teeth, to get someone to do something.
The man who organized the 1984 Olympics, Peter Uberoth, has been pulled in by the state to reverse that. But some say rebuilding the burnt-out areas of the city will really be an Olympian task. John Defterius of Reuters for NBR, Los Angeles.
Concern about claims from the LA riots drove insurance company stocks down last Friday, but the shares stabilized today. Aetna gained 3/8. Allstate's parent company Sears rose 5/8. Transamerica gained 1/2, and Travelers also rose 1/2. Paul Kangas is off tonight, but Scott Kirby is here with the full market report.
And Cassie, you know, hindsight always gives you perfect vision. And it seems clear now that the 23-point sell-off on Friday was due to fear and uncertainty about the crisis in Los Angeles. When peace returned there, buyers returned to Wall Street. The Dow climbed nearly 30 points in the first half hour of trading today. The rally continued through the morning, led by IBM, which got a buy recommendation from Chase Manhattan. By 1:30, the Dow was up more than 50 points, and program trading restrictions went into effect. Some profit-taking led to a pullback in late afternoon, but the Dow remained in record territory and went on to close at 3,378.13. That's the 18th record close of the year. The actual high of the day, 3387.52, the low 3336.31, a wide, better than 50-point range. Trading volume today, 174.5 million shares. That's not very high, and it was down 3 million shares below Friday's pace, up volume swamping down volume 4 times over. The Dow Transport Index gaining 21.3, strong rail group, utilities rising 1.44, the closing tick moderately bullish, plus 332. Standard & Poor's, the 500, 400, 100 ending with multiple point gains, all within a few points of their record highs. The Commodity Research Bureau May Index rising 2.25 points. The New York Stock Exchange Index moving up 2.22, the value line gaining 1.5, the Wilshire 5000 closing up just over 38.5 points. Bonds opened down but recovered in light trading. Traders characterized the market as jittery. Those jitters were caused by uncertainty over the $36 billion Treasury refunding that begins tomorrow. We'll have the details in a moment. Markets were also closed for holidays in both London and Tokyo. Treasury yields rose. Corporates were soft in thin trading. The bellwether 30-year Treasury closed down 2/30 seconds. The Shearson Lehman Long Treasury Bond Index lost 0.32, and Fed